Is the upside surprise in the September CPI report a blip or a bounce? Hi, I'm Jake Schurmeier, Fixed Income Portfolio Manager, with today's episode of the Harbor Lookout. US CPI for September printed at 0.4% and 0.3% month over month for headline and core inflation respectively, which was above consensus expectations. Shelter costs surprised to the upside, but it was the increase in core services, excluding shelter, something we refer to as super core inflation, that generated concern. The increase in shelter inflation can be overlooked, as there remains disinflation to come based on known shifts in private market rents from alternative data sources. However, marginal rents on a real-time basis are stabilizing, meaning the expiration date for disinflation from the housing market is visible on the horizon. On the other hand, the acceleration in supercore is more difficult to dismiss outright. The labor market continues to surprise with robust hiring, few jobless claims, and signs of easing relegated to the margin. The broad and rapid disinflation beyond supercore year to date had lent credence to the FOMC's initial contention that much of the post-pandemic inflation owed more to transitory factors rather than excess demand for labor. Stalling progress on supercore, however, will fuel concern that excess demand for labor requires more restrictive policy from the Fed. It's only a month of data, so we're not sounding the alarm yet, but it is the most important indicator for the near-term Fed policy expectations. Despite the surprise in the September CPI report, the odds of another hike this year are less than a coin flip proposition, as both markets and lately policymakers move past the immediate future for the Fed funds rate to the broader tightening in financial conditions over the last quarter. But maybe that shift is premature, and we still have a few inflation surprises in store. Thank you for your time today, and stay tuned for our next episode of the Harbor Lookout.